So Sabina and Ekima are partners in SH and Company Advocates. So the TO balance extracted from their books of account as of 31st of December 2009 was as follows. So we've actually in this case been given a TO balance there that has capital, office equipment, fixtures, accounts payable, a client account balance, work in progress, client disbursements balance, the bank account for the client, and of course for the office, library books. This is what I was talking about. The books will likely be recognized as a non-current asset. We have library books. We have accruals, then a loan from the bank. Then we've been given additional information down there. So from note number 1 up to, in this case, note number 14. So they want us in this case to prepare in columnar format the client account, the cash book, income statement for the year ended 31st of December 2010, and a statement of financial position as of 31st of December 2010. So those are what they want us in this case to end up having to prepare. So of so much importance, I've been able to tell you that in this case, there are key accounts that in this case will end up having to be maintained here. So the cash at bank, the client account, and of course now in this case you have what? The debtors and the disbursements account. So those are like in this case what? Special accounts that will end up having to do what? End up having to be maintained, end up having to be maintained. So we can be able to create these accounts and of course see what are the entries that will end up having to pass through these accounts. Then eventually we can be able to extract now the income statement, general income statement, and of course now in this case what? The statement of financial position. So in this case, they want us to come up with the client account and of course what? The cash book. The client account and of course what? The cash book. So the cash book and of course the client account. So of course for the cash book, you've been able to say in the cash book, they'll be able to maintain 2 bank accounts. There'll be one bank account for the firm itself, and there'll be another bank account for the client, So we can in this case open the cash book. We can have the cash book. So the cash book, we can have the cash book. We can have the cash book. We can have in this case the cash book. So the cash book, we can have the cash book. We can have the cash book. We can have the cash book like that, the cash book like that. So in this case, we'll have details. We'll have the details. We'll have the details. Then there'll be 2 columns. There'll be one column for the office, one column for the office, because you're having to say they maintain 2 bank accounts. For the office, and of course, there'll be another column for the client, whereby you've been able to say the accounts are actually separate. They're actually separate. So the same case, you'll be able to end up having to do the same for that other side. For that other side, you'll do the same for that other side. So you'll have in this case the column for the office, the column for the office, and we have the column for the client. The client. So of course, this is the credit side, and of course, this is what? The debit side. This is the debit side. The debit side. Then, of course, also I've been able to tell you that in this case, there'll be these other special accounts that will have to be maintained. We'll have that in this case, the debtors and the disbursements account. Debtors and disbursements account. There'll be the debtors and the disbursements account. Then in this case, we can be able to have also the client account. The client account. You can also be able to have the client account. We can have the client account having to be maintained, The client account having to be maintained. Of course, what they wanted us is the cash book and of course the client account. But of course, this one is very important because it will enable us to know the balance for the debtors and disbursements, which will end up having to take to the statement of financial position as what? As an asset, as I had already indicated to you earlier. So that is very important. That is very, very important. So we can be able to go through the question step by step so that in this case, you can be able to know how you end up having to account, So of course, quite obviously in the cash book, you can end up having to start with the balance brought down. The balance brought down. And of course, in this case, if you want to know the balance brought down in the cash book, you can go to the TO balance. you can go to the trio balance. So we have in this case, the balance brought down, balance brought down, balance brought down. If you look at the trio balance, hope you are able to see it. If you look at the trio balance, there's that balance that they're having to indicate for client 575 and office 690. So hope you'll be able to see it, 690. And of course, for client, in this case, it is 575. Have you seen it? Have you seen it? Have you seen it? Have you seen it? Anne, have you seen it? So I can see Irene says yes, you've been able to see. That is the opening balance. So of course, it means if it would have been on the credit side, you would have put the balances this side, which in this case, it could be an overdrawing by the start of the period. But now in this case, they are on the debit side. So it means the balance brought down will likely be what will be on the debit side. Will likely be on the debit side. Will likely be on the debit side. Then we can now go through the additional information. We can now go through the additional information to see whether we have any transaction that ended up having to do what affect the cash book. So one thing I have to inform you about the cash book, the cash book will only record actual cash inflows and actual cash outflows. So it won't actually record, like in this case, amounts which haven't been received or amounts which haven't been spent. In the cash book, what we normally record, it is actual cash inflow that you're having to receive. It hits the bank. Is when in this case, you can be able to record it here. But if the monies haven't hit the bank, that is still what? Maybe a debtor, or in this case, it's the amount you haven't yet actually been able to pay. So here we'll basically be talking about what? Actual inflows and actual outflows. Actual inflows and outflows. So for any inflow, we'll likely be debiting. For any outflow, actual outflow, we'll likely be crediting in the cash book. We'll be crediting in the cash book. So we can go through the additional information. So the following transactions were carried out by SH and the company advocates during the year ended 31st of December 2010. So the first note in this case, you're having to be told, charged a client 14,700,000. So of course, there's something I've forgotten. So you need to be able to indicate these are actually what? Shillings in thousands. They're actually what? Shillings in thousands. So they are not cows for vaccination. They're not cows for vaccination, but of course they are shillings in thousands. You need to indicate that. They are shillings in thousands. Shillings in thousands. They are not cows for compulsory vaccination. So they are shillings in thousands. You need to be able to indicate, find a space here and actually indicate shillings in thousands. Shillings in thousands. These are actually shillings in thousands. They are not cows for compulsory vaccination. So that is what you need to be able to indicate. So note number one, charged a client 14,700,000 for services rendered during the year. So of course, in this case, you've just been told they charged a client. They charged what? A client. So it means whenever they charge a client, this client becomes what? A debtor. Becomes what? A debtor. Becomes a debtor. Becomes in this case what? A debtor. Becomes a debtor. So that is what they ended up having to do, what? Charge the client. But of course, now in this case, that means we'll record there. We'll record there in the debtor's account. But if you look at now in this case, the trio balance, if you look at the trio balance, there's that, this account is for debtors and disbursements. So there's a balance brought down of debtors and disbursements. There's a balance brought down. There's a figure of 759. Hope you can be able to see it. 759. 759. Therefore, in this case, there's also in this case a fee that was charged to clients. So fee charged to clients was an amount of, in this case, 14,700,000. So they'll claim from them. They will claim from them. So they become debtors. Those clients become what? Debtors. So it means in this case, it will end up having to increase what? The debtors balance. So when they open the year, the debtors and disbursements account and a balance brought down of 759 from the trio balance, from the TB. This one is from the TB. Irene, it is from the TB. Trio balance. But now this one, under additional information number one, you've been told they charged clients how much? 14,700,000 for the services rendered. So they haven't been paid. So these clients become what? Debtors for the firm. Then number 2, received 1850 on behalf of what? Of a client. So they received an amount of what? 1850 on behalf of a client. So in this case, it means they, of course, received money, but it was not their money. So of course, you'll be able to record it what? In the client bank account. So that was an amount of 1850. An amount of 1850. So cash received. So cash received on behalf of the client. Cash received for the client was an amount of 1850. Of course, now in this case, there's something I told you. There's something I told you regarding any entry in the client bank account. Where should we also record it? Any entry in the client bank account, we should also record it where else? Any entry in the client what? Account. And of course, now in this case, it will go which side of the client account? It will go which side of the client account? Faith. Which side of the client account? The credit side. It will end up having to go what? The credit side. The credit side. The credit what? Side. So in this case, it means here, we'll have in the bank, they received on behalf of the client an amount of 1850. 1850, an amount of 1850. An amount of 1850. So the complete double entry will come here. Sour. So as we debit here, we go to the client account and we do what? We credit. But there's something you have to note about this client account. We've been told in the trio balance, just look at the trio balance. In the trio balance, there's a client account figure of 575, which is on the credit side. It means in this case, the balance brought down here was actually 575. This one, Faith, it is in the TB. It is in the trio balance as the balance brought down. So of course, you have now all the balance brought down. We have here, and we have here. All these ones, we've gotten them from where? From the trio balance as the balances at the start of the year. At the start of the year. Then in this case, they received 1850 on behalf of the client. We debit the client account in the cash book. But now in the client account itself, we'll credit an amount of 1850. Number 3, received 11,400,000 from the clients in settlement of of amount due for services rendered. In settlement of amount due for services done what? Rendered. For services rendered. So it means in this case, they received from a client. So that was cash that was actually received. So from debtors, it is in their bank accounts. They are the ones who are receiving. They received an amount of 11,400,000. 11,400,000. So they were receiving from what? From a client. Remember, in this case, they had charged some clients, but now they received. So it means in this case, we'll end up having to, of course, debit the cash book here, 11,400. But which account will we credit? According to which account will we credit? If in this case, they receive this cash and we debit here in the office bank account, which account are we going to credit? Try to think through. Try to think through. And you need to think. And you need to think. You need to think and the debtors account. The debtors what? Account. So in this case, it means here they received from the debtors. In this case, the money was going to the bank. The money was actually going to the bank. It was an amount of, in this case, 11,400,000. And of course, you would have completed that what? Double entry because they were debtors when they charged them. But now eventually they paid them. They provided for them services. They became debtors, but they paid them. So the debtors will be reducing because they have paid them. Then in this case, so that is in this case as per note number 3. That is as per note number 3. Then we are told in note number 4, used 1.5 million to acquire a house for a client who had a credit balance of 800,000 with the firm. So in this case, they used how much? 1.5 million to acquire a house for the client who had a credit balance of 800,000 with the firm. So it means in this case, this client had monies in his account. This client had what? Monies in his account. But now in this case, these monies were not actually what? Adequate. They were not actually adequate. They were not actually enough. They were not actually enough. So in this case, it means they spent, like in this case, is it 700,000? I think on their behalf. So I think 700,000 on their behalf. So in this case, used 1.5 million to acquire a house for a client who had a credit balance of 800,000. So this client had only 800,000 in his account. 800,000 in his account. So acquisition of a house. So they acquired a house. Acquisition of a house. acquisition of a house. So they spent 700,000 on his behalf. Hope you are getting what the point is having to say. They spent 1.5 million to buy a house on behalf of a client. This client kwa account yake alikuwa tuna how much? 800,000 peke yake. Alikuwa tuna 800,000 peke yake. So inamaanisha in this case, the monies that he had in the account were not actually adequate. They were not actually what? Enough. They were not enough. And therefore in this case, they spent how much? 700,000 on his behalf. But for the client himself, walimtolea kwa account yake how much? 800,000. Walimtolea kwa account yake how much? 800,000. In total, it comes to what? 1.5 million to acquire the house. The client had only a credit balance on his bank account of 800,000. It was insufficient money. And therefore, they spent what? On his behalf. How much? Extra 700,000 to make it 1.5 million. To make it 1.5 what? Million. So now in this case, you're having to say that from the office account, they spent what? 700,000 on behalf of the client. Maybe I could be able to ask, according to you, where do you think the complete debit entry for this one will go to? For this 700,000? The complete debit entry for this particular 700,000 will go to which accounts? You need to think, at least think as an accounting student, as a financial reporting student. It will go where? It will go where? In the debtors account. You people are very clever. Aki kitu mshamalizana nayo. Ikitu mshamalizana nayo. In this case, they spent on his behalf, this client, and therefore he becomes a debtor. They'll be claiming this 700 from what? From that particular what? Client. He became what? A debtor. They disbursed. That is what we're talking about. What? Disbursements on behalf of the client. Disbursements on behalf of what? The client. So therefore, in this case, you'll come here and of course you do what? You debit. So acquisition of a house on behalf of the client. So that is how much? 700,000. 700,000. Then of course, quite obviously, I told you, any entry in the client column should also be able to go to what? To the client account. So it means in this case, this 800,000 will debit it here. Will debit it here. So that was what? An acquisition of a house. Acquisition of a house. That is an amount of what? 800,000. So hata usifikirie mara mbili. Usifikirie mara mbili. So ukitoa hapo unaiweka huku, ukitoa hapo unakuja unaiweka hapo. It will be in that client account. It will be in that what? Client account, like that. Then we can continue. So that is note number 4. Note number 5. Received 300,000 from the client in settlement of disbursements made on their behalf. So in this case, they received how much? 300,000. From what? From the client. On disbursements made on what? On their behalf. So disbursements or receipts from client. So receipts from client. Receipts from client. It was an amount of how much? In this case, 300,000. 300,000. So it was from a client whom they had paid on his behalf. So tutaiweka hapa sawa. Itapunguza huyo. So walimdisbursia. Maybe ni huyu. Maybe ni huyu. So this case bank, in the bank, they received how much? 300,000 to settle that what disbursement they had done on his behalf. They had actually done on his behalf. So that is in this case how you'll be able to account for note number 5. Note number 6, purchased library books worth 366,000, paying cash, and repaid 550,000 of a loan from a bank. Over a loan from what? From a bank. So in this case, they purchased what? Library books. They purchased library books. So library books, that was money having to be spent out of here. Library books. Library books, it was an amount of purchased library books worth 366, paying cash. So 366, an amount of 366. Then of course, in this case also they repaid a loan bank. They repaid a loan bank. They repaid a loan bank an amount of 550,000. So the easy tumesema zitakuja kuwa nini? Non-current assets. Non-current assets. So nakumbuka tukisema lawyers wanapenda kusoma. Wananunua vitabu sana, wanaweka kwa library. Wanasoma sana. Hizi vitabu, when you'll be preparing now the statement of financial position, we must recognize them as what? As assets. And therefore in this case, it means the complete entry for this one goes as a debit entry in the library books what? Account. So we'll be able to add them. The others which are here in the statement of what? In the trio balance, 644. So tutaongeza hizi 366 ikuje kuwe 1 million. So when we be preparing the statement of financial position, we have to recognize these ones as what? As an non-current asset. So fai kusahau that one when we'll be coming up with that one. When we'll be coming up with that one. Then so that's about the purchase of the library books. So the purchase of the library books. Then incurred the following expenses which were paid for the year ended 31st of December 2010. So there were expenses which were actually incurred, which were paid out of the bank accounts. So you have in this case rent, salaries and wages, and of course office provisions. So office provisions. So hizo zitaenda tu direct vile ziko. So in this case they paid. So that was actual cash outflow from the firm. So in this case it means in this case they paid what? Rent. So they paid rent for the office. They paid 600,000. For the client they paid in this case 120,000. Then in this case for salaries and wages they paid salaries and wages. They paid in this case 2450. For the client, they paid 150. For the client, they paid 150. Then office provisions, they also paid for office provisions. Office provisions, they paid how much? In this case, 410. So that is what actually happened. Na tumesema hatufai kufikiria mara mbili. Tumesema in this case hatufai kufikiria mara mbili. Any entry in the client account lazima ikuje hapa. So kama hapa ni credit inakuja kudebitiwa hapa. So quite automatically in this case Beatrice tunakuja hapa tunaweka in this case rent tunaiweka hapa on the debit because now in this case we credited it here in the bank account, we debit it here. So we have rent, it was an amount of 120. We have in this case salaries and wages. Salo walilipa pia Salo on behalf of the client. Walitoa kwa account yake wakamsaidia kulipa Salo walimlipia how much? 150. So we debit it here and would have completed that one, like that, that one like that. Then so that is note number 7. So we go to note number 8. Incurred the following expenses which had not been paid, which had not actually been paid as of 31st of December 2010. So you have in this case legal fees, we have salaries and wages, and we have in this case what? Rent. We have rent. So these ones were just incurred as what? As expenses. So remember in this case I've told you that for the cash book we basically deal with real cash outflow, payments that were actually paid na pesa ikatoka. So usikuja ukaanza kuweka hapa expense yenye ilikuwa incurred yet hawakulipa. Sawa. That one only basically in this case affect what? The general income statement. In this case, part B, they want us to prepare an income statement. So you have to remember, when you go to the income statement, now you'll be able to consider these expenses for what? For note number 8. So our pesa haikutoka. There was no real outflow of cash. So it can't go to what? To the cash book. It only basically go to what? To the income statement. It will likely only go to the income statement. So that one, in this case, these ones will end up having to consider them. But now in this case, when you are coming up with what? With the income statement. Then note number 9. So partners withdrew 1750. So they actually withdrew 1750 from the bank. So there was in this case what? A withdrawal. So there's actually in this case what? A withdrawal from the bank. So there's a withdrawal of cash. So withdrawal of cash, an amount of in this case 1750. An amount of 1750. So there was an amount of 1750. There was a cash withdrawal of an amount of 1750. An amount of 1750. So we'll end up having to recognize that one by having to remove it from what? From the office account. You can be able to refer to them as drawings. You can just write drawings. You can write drawings. So they withdrew 1750 from the bank. 1750 from the bank by the partners. So it means it reduced the cash that was actually there in the bank. The cash that was actually there in the bank. Then note 10, withdrew 450 from the client's account as a professional fees. So withdrew from, in this case, the client account 450 as what? As a professional fees. So in this case, we have professional fee. professional fee. It was withdrawn from the client account, 450. But now in this case, because it was a professional fee, he was receiving it. So it is a contra entry. So in this case, you have a professional fee of an amount of 450. So inatoka kwa client account, inaingia kwa account yake. Inatoka kwa client account, from the client account as a professional fee. They provided for them services. So they had charged them. Then it ended up having to do what? Withdraw. So they actually withdrew this money from what? From the client account. They actually withdrew the monies from the client account. They withdrew the monies from the client account. So in this case, we'll have in this case what? A contra entry. We'll have in this case a contra entry of an amount of 450 as what? As professional fee. So that is what? 450,000. Then note number 11, acquired office premises for 6.5 million and paid 3 million in cash. The balance was financed through a mortgage, which attracts interest at the rate of 12% per annum. Assume the office premises were acquired on 1st of January 2010. So acquired office premises of 6.5 million and paid 3 million cash. So it means in this case, this one will affect the cash book because they paid what? Cash. So the 3 million will likely in this case 3 million. So in this case, we'll have 3 million. So acquired office what? Premises. So we have office premises. We have office premises of an amount of, in this case, 3 million. So they paid, it was for 6.5 million, but now they paid 3 million as cash. So take note that in this case, for the remainder of the amount, that is 3.5 million, it was financed through a mortgage, which attracts an interest rate of 12% per annum. That one you have to remember, when now in this case, we'll be coming up with the general income statement. With the general income statement, we'll have to compute interest expense. So the interest expense there will automatically be 12% multiplied by what? By the 3.5 million. So you need to remember, when we'll be coming up with the income statement, we have to compute the interest on that mortgage. And of course, interest on the mortgage will be what? Will be an expense, which has to be recognized what? In the income statement. Which has to be recognized where? In the income statement. Which has to be recognized in the income statement. Which has to be recognized in the income statement. Which has to be recognized in the income statement. So you need to be able to take note of that. So then number 12, donated 2 million to charitable trusts. So that donation in this case was from what? From the office account. So donations of 2 million. 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 So to a charitable trust. Donations of 2 million to a charitable trust. Then note number 13, represented a client whose work in progress as of 31st of December was valued at 1170. The work in progress had not been invoiced to the client. So this work in progress, I'm going to show you how in this case you account for it when you're coming up with the general income statement. So this work in progress has to be accounted for whenever in this case you are coming up now with the general income statement, which I'm going to show you how you account for it. Then note number 14, which is the last one. The firm provides depreciation on non-current assets based on book values at the following rates. So you have in this case office equipment, fixtures and furniture, library books, and of course office premises. So for note number 14, you have to remember when you are coming up with the general income statement, also we have to compute what? Depreciation. So these ones will be like now in this case what? Expenses in the general income statement. In the general income statement, these ones will be like the expenses. But of course, still at the same case, this depreciation has to be considered when you are coming up with the net book values. The net book values or what will be recognized as assets in the statement of what? Financial position. So that's why in this case, you'll be able to deal with what? Note number 14. So we have to recognize those expenses in the overall income statement. In the overall what? Income statement. In the overall 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 income statement, in the overall income statement. In the overall income statement. So there's this amount of 450, which I haven't been able to indicate here. So this one, tulikuwa tumesema kitu yote iko kwa client account, tunakuja tunaiweka hapa, sawa? Tunakuja tunaiweka hapa, kitu yote iko kwa client account, tunakuja tunaiweka hapa. So in this case, it was what? Professional fee. Professional fee of an amount of 450, sawa? So in this case, we'll credit that professional fee that was paid of 450, then we debit the client account 450. Then we've been able to say, because he received the money, the money hit the bank, because your client will hit account yake ya office. So tuta debit kwa sababu hiyo pesa ilikuwa inaingia. And then at the same time, when the client paid, of course, he was a debtor. So it means it was reducing here. It was reducing here. So here we'll be able to indicate professional fee of an amount of 450. So take note number 10. Hatukuwa tumemalizia vizuri, so nimekuambia sasa. So in this case, the professional fee which was gotten from the client account, you'll of course credit. Then of course, in this case, the specific client account will end up having to debit to complete that. The money was received in the office account, 450. It means that client was a debtor here. So once he paid, he reduced the debtor's balance by 450. And of course, that is the complete double entry. So you credit here, you debit there. Then in this case, you credit here, you debit here. And of course, you would have been able to do what? Complete. You would have been able to complete. You would have been able to complete those accounts. So now in this case, I want us we balance them. So I want you to give me the totals here. We can start in this case with the debtors disbursement. I want you to give me the totals here. So this side will be more. This side will be more. So what is the total here? What will be the total here? Diana, give me first of all the total here. I'll elaborate for you. Give me the total here first of all. Let's balance them. Then I'll elaborate for you. Give me the total here. You want me to elaborate, not number 8. So just give me the total first of all here. I can see you're saying 16,159. 16,159. So 16,159. This one is 16,159. So give me the balance carried down. Give me the balance carried down in the debtors and disbursements account. I can see you're saying 4,009. 4,009. Then also balance for me this one. So give me the total. Give me the total. Give me the total here. This side will be more. So this side will be more. Give me the total here. Give me the total here. The total on the credit side. The credit side will be more. Give me the total on the credit side there, which of course will be the same as this one here. It will be the same as this one here. It will be the same as this one here. It will be the same as this one here. What is the total there? It is 24.25. So 24.25. 24.25. Sindio? 24.25. So 24.25. Diana umeona. So Diana unaona. So it will be the same because you see hizi tulikuwa tunabeba tukipeleka huko, sindio? It will be the same. So 575 plus 1850 because you are completing the double entry like that. So I want now you to give me the balance carried down here. The balance carried down here, which will be the same as the balance carried down. The balance carried down here. It will be the same. It will be the same. It will be the same. It will be the same balance carried down. It will be the same balance carried down. So what is the balance carried down there? 905. It will be 905. 905. This one is 24.25. The balance carried down here is 905. Ni same, sawa? Takuwa same kwa sababu we were just passing the same entries. Ni same. So now I want you to give me the total here, the total that is actually here, the total here for the office account. Give me the total for the office account. The total for the office account, naona ni kama amoni hapo chini. It's like you people are not able to see. Let me adjust for you. So I think there it's okay. Should be okay there. So you should be able to see down there. So give me the total for the office account here. The total for office account here. I can see you're saying 11,796. Confirm your figure. Confirm your figure. This one is 690, 11,400, 300, 450. It is 12,840. It is 12,840. It should be 12,840. 12,840. 12,840. So here it is 12,840. So now give me the balance carried down. 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 1014. I can see you're saying 1014. 1014. Irene says 1014. Cheburugei. Cheburugei, you're not saying anything. You need to say something, Cheburugei. Cheburugei, you need to say something. So it is 1014. Is it 1014? Annie Simuli, you're not also talking. Annie Simuli, you're not also talking. You need to talk. You need to talk. Annie Simuli, you need to talk. You need to talk. Another person needs to confirm that figure by Irene. Faith says 1014. Nixon says 1044. 1014. 1014. 1014. Majority are saying 1014. So it seems 1014 is correct. Is the balance carried down? Exactly the balance carried down. So ideally what will happen now, this particular figure here will go to the statement of financial position as an asset. Sawa, as an asset. This particular figure here will go to the statement of financial position as a liability. Na hiyo nilikuwa nishawaelezea. Nakumbuka nikiwaambia hapo the accounts that are maintained. Nikakwambia weka into bracket liability. This one will go as a liability because you can see it has a credit balance. This one has a debit balance. It will go as an asset. It will go as an asset. These ones here, they'll go to the statement of financial position as assets. They'll go to the statement of financial position as assets. Sawa, because they have a debit balance. They have a debit balance. So of course, that is how in this case you come up with what you were talking about. The debtors disbursement account, the client account, and of course the cash book. Very important you maintain the cash book with separate accounts, one for the client and another one for the office. The entries in the client account automatically go to the client account. The double entry is completed in the client account. Whom now in this case is like a creditor. Ni kama ni creditor. Sababu hapo una record zile pesa uko nazo on his behalf. Once you pay, unafanya hivi na hivi. So that's why in this case you're having to say eventually it becomes what? A liability. Eventually it becomes is like a creditor. And now in this case, the disbursements you do on behalf of the clients become like debtors. So therefore you maintain them together with the debtors account. You maintain them together with the debtors account. So my friend in this case wanted to know how we treat number 8. Incurred the following expenses which had not been paid for as of 31st of December 2010. So he didn't pay for them. So we say these ones, they won't affect the cash book. So they'll basically in this case be what? We call them what? Accrued. Is it accrued or outstanding? Accrued or what? Outstanding. So mnazitanga hivyo. Accrued. They are outstanding what? Expenses by the end of the year. So they were not paid for. But in this case, they'll have to be accounted for in the general income statement as part of what? The expenses. Sawa. So they were not actually settled, and therefore they just be recognized as what? As expenses in the general income statement, and of course also in this case what? In the statement of financial position as what? As liabilities. As liabilities. So of course now in this case we can be able to now come up with part B. We can now come up with part B, the income statements. We can come up with part B, the income statement. We can come up with part B, the income statement. Can come up with part B, the income statement. So they wanted to income statement for the year ended 31st of December 2010. Income statement for the year ended 31st of December 2010, 2010, 2010, 2010, 2010. So it is SH and Co Advocates income statement. So SH it is for the year ended, so for year ended 31st of December 2010. 31st of December 2010. So we can put our shillings in thousands. Let me push it a bit. Our shillings in thousands. Shillings in thousands. Shillings in thousands. So of course, most automatically in this case, when you talk about an income statement, you normally start with what? The incomes. You normally start with the incomes. You normally start with the incomes. You start with the incomes that were realized by this particular firm. The incomes that were realized by this particular firm, So if you look at all the information you've actually been given, so in note number 1, there's an income because they charged, you are told they charged clients 14,700,000 for services rendered during the year. So that is the anticipated income they were expecting to get during, that is what they generated as income. They provided services and they had sent out, for example, invoices to claim for this money. So in this case, we have, as per note number 1, so fee to clients, fee charged. So fee charged, which was part of the incomes they received. The fee charged there was actually, in this case, in the tune of 14,700,000. So 14,700,000. So that is part of what the revenue they were to get for this particular year. Then just a while ago, I've actually been able to indicate to you how you'll end up having to deal with what we call work in progress. When you talk about work in progress, this is simply work that they were still continuing for the client. So in this case, at the start of the year, in this case, you are told in the TRIO balance, if you look at the TRIO balance, we have work in progress of 1483. So that is in this case at the start of the year. So at the start of the year, in this case, we have work in progress of 1483. You have to be very keen as to what I'm having to explain here. Just be very keen as to what I'm having to explain here. So you're having to say, at the start of the year, the work in progress, and that is what is actually in the TRIO balance. You can be able to see it is actually 1483. Then at the end of the year, if you go to additional information number, it is additional information number 13. Represented clients whose work in progress as of 31st of December. By the end of this year, which you are preparing the income statement, they will still work in progress of, in this case, 1170. 1170. They will still actually, in this case, what? Work in progress of what? 1170. 1170. So it means this 1170 was actually anticipated income in the year 2010. Sour. Which in this case, we are preparing the income statements, because by the end of this year, 2010, they were still providing some work for some clients, which was what an amount of what? 1170. But when they were starting the year, they carried forward work from the year 2009 of worth of an amount, how much? 1483. Worth of an amount, how much? 1483. 1483. So it means in this case, this 1483 actually, it is work for the previous year. It's not actually work for this particular current year. And therefore, in this case, when you are looking at the incomes realized here, we'll have to add work in progress. We'll add work in progress at the end of the year, which was an amount of, in this case, how much? 1170. Then we less work in progress at the start of the year, which is what is actually shown in the trio balance. This one is as per note number. It is as per note number 13. Note number 13. So we less this one work in progress at the start of the year, which was actually an amount of 1483. 1483. So that's why in this case you treat the work in progress. This is basically work they were still having to carry on for clients, for them maybe to be able to do what? Charge. This is how you account for it. This is how you account for it. So you take the work in progress at the end of the year, you add on the fee charged. You less any work in progress at the start. That is if you are told that there was work in progress. But if you are not told, you won't put them there. But if they are there, it means you'll take the work in progress at the end of the year, you add. And in this case, work in progress at the start of the year, you less. And therefore, of course, now in this case, those are the only ones that will end up having to maybe generate the incomes for this particular law firm. Then we can be able to less the expenses. We can less the expenses. We can be able to less the expenses. So to less the expenses, if you look at you can look at any expense that was actually incurred. Maybe in this case, it can be through what was actually paid, or in this case, what was actually incurred but they were yet to pay. Those will likely still be what? They'll still likely be expenses. For example, now in this case, if you look at note number 7, you are told they is spent on rent. So as per note number 7, you have in this case what? Rent. We have rent. We have salaries and wages. We have in this case office provisions. So in this case, this one is actually 600. This one is 2450. This one is 410. This one is 410. So that is as per note number 7. Then when you go to note number 8, which was being asked by one of our friends, so incurred the following expenses which had not been paid by the end of the year. So in this case, it means for note number 8, we'll still be able to recognize them as expenses because they are accrued expenses at the end of the year. Accrued expenses at the end of the year. They are accrued expenses at the end of the year. They actually accrued expenses at the end of the year. So in this case, it means we'll end up having to recognize them here as per note number 8. As per note number 8, you have legal fees. We have legal fees of 3,400. We have in this case salaries and wages. Salaries and wages of 1,650. Then in this case, we have rent of an amount of 1,720. Alternatively, you can take this figure, you add on this one. You can take this figure, you add on this one. But me, I've just been able to separate them. So in this case, we would have said rent plus accruals, which are these figures. Maybe I could end up having to ask, how will we recognize these ones in the statement of financial position? These are accruals, these ones that are actually accrued. How will we recognize them in the statement of financial position? in the statement of financial position, how will we end up having to recognize them? As liabilities. We recognize them as what? As current liabilities. So any expenses outstanding at the end of the year or accruals at the end of the year, they are current what? Liabilities. I can see my friend is asking, what about the figures for the client? Remember, in this case, we are looking at the income statement of the firm, not the client. Remember, those were basically expenses for the client. So we are not focusing on the accounts for the client. We are focusing on the accounts of what? Of the law firm. What is spent on behalf of the client is not his expenses. He was just doing it on his behalf. So we are focusing on what? The expenses for the law firm. For the expenses for the law firm. So these ones will likely be what? Will likely be current liabilities. Then note number 11, acquired office premises for 6.5 million and paid 3 million in cash. The balance was financed through a mortgage, which attracted interest rate at 12% per annum. Assume the office premises were acquired on 1st of January. So it means this mortgage was actually in this case was actually in existence for the entire year by the time we are preparing these financial statements. So it means you have to compute interest on the mortgage. Interest on the mortgage. So in this case, you have mortgage interest. Mortgage interest. I don't know whether it will be able to fit here. We can have mortgage interest, mortgage interest. We can have mortgage interest. In this case, it will likely be 12%. 12%. We multiply by 3.5 million. 3.5 million. What do you get when you multiply 12% by 3.5 million? Irene, 12% by 3.5 million, because that is the interest expense on the mortgage. Remember, the entire value of this premise was 6.5 million, but they were able to pay 3 million in cash. So it means the balance was financed by what? By the mortgage. It is 420,000. So in this case, it is exactly what? 420. 420. So we can be able to put it there. 420 as part of what? The expenses. As part of the expenses. As part of what? The expenses. Then we can continue. We can just continue. So still, in this case, you are told they made donations. So you can continue. Just continue. Just continue. Just continue. They made what? Donations. So you have in this case donations of an amount of 2 million. Of an amount of 2 million. So the work in progress, we've already dealt with it. Then note number 14, there was depreciation. So we have in this case depreciation expense, depreciation. We have depreciation, and of course there are a number of assets there that were in this case actually done what? Depreciated. That were actually depreciated. In this case, we have office equipment at 10%, fixtures at 15%. We have library books at 12.5%. Then we have office premises at 2.5%. So we can, in this case, start with office. So depreciation expense, we have in this case office equipment. So office equipment, if you look at the TRIO balance, the value of office equipment is actually 1840. So it means in this case, depreciation for this one will likely be 1840. We multiply by 10%. Then in this case, we have fixtures and furniture. So fixtures and furniture. This one was having to be depreciated at 15%. And of course, the value of fixtures and furniture, if you look at the TRIO balance, it is an amount of 805. So we have in this case 805 multiplied by 15%. Then in this case, we have library books. Library books were having to be depreciated at, in this case, a value of 12.5%. So if you look at the TRIO balance, the value of library books is actually 644. But remember, there were some additional books that were acquired. Irene, there were some additional books that were acquired as per note number 6. So it means in this case, we'll have depreciation having to be done at 12.5%. But now we have in this case, from the TO balance, the value of books is 644 plus 366. Then we multiply by, in this case, the value of depreciation there is actually 12.5%. So that is for library books. Then office premises, it is at 2.5%. Office premises. The value of office premises, so office premises. So of course, now in this case, office premises were acquired. So they were acquired at 6.5 million. In this case, you'll be able to take 2.5% of 6.5 million. So 2.5% multiplied by 6.5 million, 6.5 million. So what is the value of depreciation for office equipment? What is the value of this one is easy. It is 184. Since your 10% of 1840, it is 184. 184. What about for fixtures and furniture? Give me for fixtures and furniture. Give me for fixtures and furniture. 120.75. 120.75. I can see 0.75. What about in this case for library books? What about for library books? For library books, I can see you're saying 126.25. 126.25. What about in this case for office premises? What about for office premises? What about for office premises? Irene, you're 88.75 umetoa wapi? Irene, umetoa wapi? Umetoa wapi? So what about for office premises? 162.5. 162.5. 162.5. 162.5. And therefore, I think those are the only expenses we have. Those are the only expenses we have. Those are the only expenses we have. So what is the total here? Give me the total figure here. For the incomes, give me the total figure here for the incomes. Nixon. The total figure for incomes, Nekesa. The total figure for the incomes here, this figure. Ateka, you're not saying something. Ateka 143.87. So hope it is correct. 143.87. 143.87. So now in this case, give me the total for the expenses. Add all of them. Hizi zote mpaka huku. Then unipatie figure. Unipatie figure ya kuweka hapo. Do the total for all the expenses. Sawa, 600, 2450, all of them. Beatrice. The total for the expenses. The total for the expenses. Irene, the total for the expenses. I can see you're saying Cheburgei. Cheburgei says 132.43.5. Cheburgei pia si mchache. 132. Cheburgei pia si mchache. 132.43.5. I think that figure is correct. 13,243.5. So 13,243.5. So now you need to less from this one. Then you give me the figure for the profits. You give me the figure for the profits. Give me the figure for the profit. Diana, the figure for the profit. You need to less. Then you give me the figure for the profit. $1143.5. 1143.5. 1143.5. 1143.5. So that is the profit for the farm. Profit for the farm. Profit for the farm. Profit for the farm. It will be that one. Sawa. 1143.5. So hope mmeona kitu imetendeka hapo. Hope mmeona kitu imetendeka hapo. Anyone with a question, because I want us now in this case, we quickly look at the statement of financial position. So we quickly look at the statement of financial position. Na ka Friday katakuwa kameisha. Ka Friday katakuwa kameisha. Ka Friday katakuwa kamaisha. Wakwenda kukesha waende kesha. Wakwenda kujibamba waende wajibambe. Ka Friday katakuwa kameisha. So we can look at the statement of financial position. Wakwenda kesha waende kesha. Wakupika ugali wapike ugali. Wakupika ugali wapike ugali. So we can look at SH and company advocates. So that is the final thing. We are looking at the statement of financial position. Statement of financial position as at 31st of December 2010. 31st of December 2010. So we can have, in this case, our shillings in thousands. So we can start with non-current assets. Non-current assets. So non-current assets. So you have a number of non-current assets. We have a number of non-current assets. So in this case, we have office equipment. You can start with office equipment. You have a number of non-current assets. We can start with office equipment. Office equipment. So office equipment. So it was a value of 1840, but now there was a depreciation. 1840. That depreciation we've been able to get is 184. Single 184. Alaf, in this case, we have also another item of asset, fixtures and furniture. Fixtures and furniture. So the value for fixtures and furniture is 805. But of course, there was a depreciation. There was a depreciation of, in this case, is it 120.75? 120.75. Then also we have library books. Library books, of course we had 644, but kuna zile zilibaiwa 366, zikafika 1 million, zikafika 1 million, zikafika 1 million. Is it 1 million? Was it 1 million or how much? So let me check. So 644 plus 366. What do you get? 644 plus 366. What do you get? You get 1010. Sawa. 1010 is not 1 million. Hope when you are computing depreciation, you used 1010, not 1 million, because I was assuming it will come to 1 million exactly. So that is 1010 minus 126.25. That is the depreciation, 126.25. So then in this case, we have office premises. Office premises. Office premises was a value of 6.5 million, but there was a depreciation of, in this case, how much? 162.5. 162.5. So I want you to give me the figures here. Give me the figures here. So office equipment, how much here? The figure. Ann Simuli is here. Ann Simuli, give me the figure here. Ann Simuli, office equipment. 1656. Hope it is correct. 1656. Give me the figure for fixtures after depreciation. Figure for fixtures. Ateka, you are very quiet. Ateka, you need to say something. 684.25. 684.25. Nekesa. For library books, Nekesa. For library books, Nekesa. 883.75. Hope you people are giving me correct figures. 883.75. Then give me for office premises. Office premises, Beatrice, office premises. Office premises, 633.7.5. 633.7.5. 633.7.5. So tumekafunga hivyo. Tumekafunga hivyo. Tunaweza enda na in this case to what? Current assets. We can go to current assets. You can go to current. So for the current assets, kuna ile figure ilikuwa huko kwa debtors and disbursements. Unaikumbuka ile figure ya debtors and disbursements. Debtors, ile nilikuambia huko itaenda kwa debtors and disbursements. Unakumbuka hako ka figure? Kalikuwa ka figure hapo ka 400 009 009. So if you can be able to remember that particular figure there. Then you have in this case bank. The bank balance, also I told you it will come here. The bank balances we have for the office and of course also for the client. Both of them will come here. Both of them will come here. So office and for the client. So for the office, it was 1014. 1014. For the client, it was 905. 905. So I think it was like that. Then in this case, we have also what you need to take note, work in progress also will be a current asset. So work in progress at the end. At the end, which was a figure of 1170. I think it is 1170. 1170. So I think those will be the current assets. Then now in this case, you can go to capital and liabilities. You just continue. Can continue. Can go to capital. And liabilities. You continue with the table, capital and liabilities. So for capital and liabilities, of course, you've been told there is a capital there in the trio balance. So the capital there in the trio balance, it is a figure of 41. 40. Then there's the profit that was actually realized by this particular firm. There was the profit that was actually realized by this particular firm. So profits realized by the firm. So profits realized, which in this case you got in the income statement. It was a figure of 1143.5. Is it 1143.5? Yes, 1143.5. So those are the profits realized. The profits realized. But now there were some drawings. You remember those drawings as per note number 9? There were some drawings as per note number 9 where we were told partners withdrew 1750. So there were drawings of 1750. There were drawings of 1750. So when you draw money and use it for personal use, you are depleting your capital in the business. So you remember note 9, kuna ile tulifanya kwa, unakumbuka hapo kwa nini? Kwa cash book, kwa credit 1750. So the partners drew the money from the business. So that was, in this case, having to do what affect the capital there, was having to affect the capital there. Then we can be able to go to non-current assets. Non-current assets. Of course, you have the mortgage. Mortgage loan. It was an amount of 3.5 million. Ile to calculate interest on. So they were to acquire premises, but they didn't have 3.5 million. So they actually borrowed. So that basically becomes, like in this case, what? An non-current liability. Sorry, this one is non-current liability, not asset. Non-current liability. It is an amount of 3.5 million. So we have to account for it also. Then we have loan. If you look at the trio balance, the last item there, you can see loan from the bank. There's a loan from the bank. It is an amount of 1450. But Irene, this loan was actually repaid. If you look at, I think, note number 6, purchased library books 366 and repaid 550 of the loan from the bank. Umeona hapo? Have you seen there? Note number in this case 6. Please confirm whether you are there, Irene. Purchased library books worth 366, paying in cash, and repaid 550 of the loan from the bank. So in this case, in the true balance, you'll be given loan from the bank of 1450. But of course, of this loan, they repaid some amount of it. So we need to less. We need to less in this case, how much? 550. We need to less. And of course, when you less, I think you get a figure of 900. You should be able to get a figure of 900. A figure of 900. Then in this case, you can go to what? To the current liabilities. So those are the only non-current. You can go to the current liabilities. You can go to the current liabilities. Current liabilities, kuna ile figure nilikuwa nakwambia ile ilikuwa ya client huko kwa client account. Kuna ile figure ilikuwa kwa client account. So client account, there was a balancing figure of 905. You remember it? Na nikakukumbusha kwamba itaenda kwa the statement of financial position as part of what? The liabilities. As part of the liabilities. So it will end up having to come there. Then in this case, we have accruals. Accruals as per the TRIO balance. We have accruals. Accruals as per the TRIO balance. In this case, there's a figure of 253. There's a figure of 253. Then still the same case in the TRIO balance, there's payables. If you look at the TRIO balance, you'll see payables, a figure of 378. 378. There's a figure of 378. 378. 378. 378. Then in this case, you have accrual expenses. Accrued expenses. Accrued expenses. This one is as per note number 8. So you have to add all of them as per note number 8. As per note number 8. When you add all of them, what do you get? So incurred the following expenses which had not been paid for us at 31st of December. They had not actually paid them by the end of the year. So they were still what? Accrued expenses. Outstanding expenses by the end of the year, they are current liabilities. They are current what? Liabilities. They are current what? Liabilities. They are current liabilities. I can see the question. First of all, give me the figures. I'll answer you, Miss C. I'll answer you, Miss C. Give me the figures for the accrued expenses. You need to total them. The ones that are under note number 8. 6770. So 6770. So Miss C, you are saying that in this case, these balances are not the ones that are actually in the TRIO balance. But remember, we prepared a cash book account. So we've gotten these balances from the cash book account. Those balances in the TRIO balance, they were opening balances in the cash book. You are saying these balances are not in the TRIO balance. These balances, we haven't gotten them from the TRIO balance. We've gotten them from the cash book that we prepared. The balances that are in the TRIO balance regarding bank, we've been able to use them as opening balances in the cash book. In the cash book. So hope that is okay. Then there is one item. There's one item. So of course, in this case, if you look at this issue about the mortgage, you're having to be told acquired office premises of 6.5 million, paid 3 million in cash. The balance was financed through a mortgage, which attracts interest rate of 12% per annum. Assume the office premises were acquired on 1st of January 2010. Were acquired on 1st of January 2010. So of course, now in this case, the mortgage interest we computed was how much? Was actually 420. So we haven't been told whether in this case this one was actually paid. So we can be able to write another liability here, accrued mortgage interests. Mortgage interests, which maybe they will settle in the coming year of an amount of 420. 420. And of course, those are the current liabilities. Those are the current liabilities. That mortgage interest, we haven't been told whether it was actually settled. So it means in this case, it was actually what? Outstanding. It was actually outstanding. It was actually outstanding. It is yet to be paid. Yet to be paid. So I want to now, in this case, to Do the total. First of all, do the total of these ones up to the end here. Then you give me the figure. Do the totals of all these ones, the capital and liabilities. Do the total. Then you give me the figure. Do the totals. Missy, do the totals. Capital plus profits realized, less the drawings, all of them. Just do the totals, then you try to give me the figure. And Simuli, do the totals. And Simuli, do the totals, then you give me the figure. $16,659.5. That is according to Cheborogei. Any other person to confirm? Daniel. Daniel, you are not saying something. You need to say something in this class. You need to say something in this class. Daniel. Alex, hii yako haki. 113.50.95. Alex, hiyo yako. So Beatrice is saying 16,659.5. So 16,659.5. 16,659.5. So then do the total for these ones. Karen, do the total for these ones. Total for assets, I can see Irina has already done 16,659.5. 16,659.5. And of course, it is in a balance. Iko sawa. Total capital and liabilities, 16,659.5. Irene, also, you can be able to confirm for these ones. I think you've already confirmed because you've given us both figures. So it is balancing 16,659.5, 16,659.5. And of course, that ideally marks the end of that particular question as to how you can be able to account for advocates. You can account for advocates. So assignment, November 2018, question number 5. You attempt that one as an assignment for the weekend. Assignment, November 2018, question number 5. There's another one also for December 2022, but you can do this one. There's another one for December 2022, but you can do this one. This one, November 2018, question number 5. And of course, that is why in this case you account for advocates. So this one is still for advocates. The one for December 2022 is still for advocates also. So you can try to look at those two questions and see whether you can be able to attempt by applying the same concept you've just been able to use to do what? To solve this particular question. So that actually marks the end of today's class. That marks the end of today's class. So we'll meet again on Tuesday. When we meet on Tuesday, let me see what will happen. So maybe in this case, we might end up having to tackle, let's see. I might do another question for doctors. But let me see. But doctors has never been tested. So they have just tested advocates all along for professional firms. So maybe I'll be able to see whether I can be able to also do another one for doctors. But let's see what happens. So we might end up having to look at accounting for, we had already done agricultural activities. We might look at accounting for cooperative societies in our next class. So the pace is really picking up very fast. In this case, you must constantly be revising. You must constantly be revising what we are going through in class because the pace is really picking up very fast. The content is really piling up very fast. You don't have any luxury of time. Of time. You need to be up to date with what is happening in class. So very important, you try to revise what you've already been able to cover so that you don't forget the concepts very fast. Otherwise, thank you very much. Have a good night. You can start enjoying the weekend.